Good evening. This was the worst day of the year on Wall Street. And unlike other dips and dives in the stock market, the reason for what happened today was pretty clear. It was the nation's top money man, the chairman of the Federal Reserve, who just yesterday gave a mostly positive review of the economy. But also in there was a warning that cheap borrowing may be coming to an end. That was the backdrop. And today, the people who buy and sell stocks for a living chose to sell, and the numbers went down. In a moment, we'll talk about how a lot of homeowners are watching this closely. First, however, let's go to where the damage was done earlier. Maria Bartiromo on the floor of the exchange on Wall Street in New York. Hey, Maria, good evening.
Hi there, Brian. Good evening to you. Well, at this point, everybody has gone home here at the New York Stock Exchange, but it was quite the scene today as the market was plummeting. And today's 350-point sell-off comes on top of yesterday's 200-point sell-off. As the Federal Reserve suggested, the winding down of the stimulus may very well happen beginning at the end of this year. So why is that such a bad thing? Basically, people are focusing on the fact that once the stimulus goes away, interest rates will begin to creep up. And that will take money out of the stock market and into fixed income, into bonds. Why would I keep my money in the stock market, which is riskier, as opposed to putting it in the bond market, which is a bit safer? So that's the thinking. I do not think interest rates are going to skyrocket out of control. And right now we are down about 5%, 4.8% from the all-time highs in the market reached in May. Every time we've seen a sell-off of 5%, a lot of people were expecting a correction of 5%. Each time we've seen that, that selling has been met by buyers. They call it the so-called buy on the dip mentality. I suspect we will see a buy on the dip mentality once again, but it's unclear if that happens tomorrow or later. It looks like we're going to be in for some choppy waters over the next couple of weeks, Brian.
All right, Maria Bartiromo, as we said, where the damage happened earlier today. Maria, thanks. Scary stuff anytime the market does anything dramatic. And, of course, what happens on Wall Street has a very real impact on Main Street, from retirement accounts to mortgage rates. After years of record lows, this prospect that borrowing might now get more expensive has a lot of people watching and on edge. We get that part of the story tonight from NBC's Tom Costello.
It doesn't take much to spook traders on Wall Street. Today, it's the prospect of higher interest rates.
There's some concern that the only reason that stock prices have gotten to the lofty levels they're at is because of what the Fed has been doing. And so there's certainly concern that if the Fed provides less support, stock prices could tank.
Meanwhile, in the real estate sector, there's cautious optimism. New data today shows more than 5 million homes were sold in May. That's up more than 4% in a month, up a whopping 13% in a year. The national median sale price for an existing home was $208,000, jumping more than 15% from a year ago. Home prices have now risen double digits for 6 straight months. But in Los Angeles, realtor Candy Peak fears another housing bubble.
It is a feeding frenzy. We have 5, 10, 25, 50 offers on most properties.
CNBC's Diana Olick covers real estate.
The trouble is that mortgage rates are rising right along with home prices, and that means buyers are able to get a lot less house than they could have even just a month ago.
Today in Virginia, newlyweds John and Aubrey Holman were looking for a home just as interest rates start to rise.
If the interest rates did go up, we'd be in a much more difficult situation. We probably wouldn't be able to afford the things we want.
Nervousness on Main Street and Wall Street as the economy regains its footing. There is fear that higher interest rates could undermine the recovery in the housing market. One more factor at play today on Wall Street, Brian, fear that the Chinese economy is slowing. China is now the second largest economy in the world. Back to you.
All right, Tom Costello in our D.C. bureau tonight. Tom, thanks.